Arrowhead Properties recorded a 12% growth in full-year distributions and an increase of 723 million rand in its asset base. Made some pretty big investments in the past year, buying properties in places like Selby and Crownwood, my old stamping ground in the south of Johannesburg. But joining us now to discuss the results and to give his input from an analyst's perspective are Mark Kaplan, he's the chief executive of Arrowhead, and Maurice Shapiro, no relation to David, from Alternative Real Estate Fund, or Altri. Mark, let's kick off with you. It's good to see you putting money into the south of Joburg, but I think there's a Chinese connection there, isn't there? Right next to Crownwood, that you're spending 112 million, is now China City.
Yes, look, it wasn't part of our investment strategy to invest in the area because of the Chinese development in the area. But I think what we found was in Selby, we found a single tenant that is I think 50% owned by Absa and 50% owned by Standard Bank, and we managed to get a long lease on that, and we were able to pick it up at a very attractive yield. I think it was around 11%. And in terms of Crownwood, that was by Gold Reef. Also, as you mentioned, in the south of Joburg, it's a multi-tenanted office park. We're able to pick that up at 11% as well, and it's anchored by a government department, I think Department of Education, with a lease until 2019. That's about 60% of the income at Crownwood.
Why those areas in particular?
So Arrowhead's strategy is not necessarily to focus on any specific area. We focus on higher yielding properties with appropriate risk levels, and we look for sustainable revenue streams. We look to buy properties that are the yield is well above our cost of funding.
Morris, the south of Joburg is not exactly where you would see most JSE listed property funds going into.
I think there's been for the bigger funds, there's been a focus on your bigger Sandton A grade. What we've actually found is a lot of B and C grade in Sandton isn't performing as well in the office space. And I think Arrowhead's strategy to pick up where other funds aren't looking and finding opportunities there is quite attractive.
Oh, 11%. That's a wonderful yield when you think of what you're having to get from a bank or elsewhere.
Absolutely. I think Arrowhead's strategy has always been to buy yield accretive acquisitions, so to grow their book and grow the income. We've seen their most recent results. They surprised the analyst community by delivering over 12% distribution growth for combined A and B units.
Good stuff. You mentioned A and B, and I think that's really what Gugu and I were trying to scheme and work out before we came on air. Just unpack it for us. There used to be Apex High, I remember, had an A and a B, and the one was higher risk than the other. How does yours work?
So it works on a similar model adopted after Apex High, really through our CEO, Gerald Leisner. And how it works was the first 60 cents gets paid to the A unit, so it's almost been like a bond-like unit up until date, until the crossover point which is R1.20, and then they share in the units, they share in the distribution equally. So what happens is from 60 cents to R1.20, the B's got all the growth, so they were supercharged. I think what the market hasn't anticipated was that we would reach the crossover point so quickly. We listed with a forecast of 98 cents in the first year. We beat that and paid 100.58 cents. We then forecast 10% growth for the next year. We beat that and we paid 12.36%. And now we forecast between 11 and 14% for the next year, well above the average in the sector.
Let's touch on your investment in residential property. Why now?
It's, the CFO, our CFO Imran Suleiman, and myself were in America recently at the REIT conference in Chicago, and it was very interesting to see that between in developed economies, and specifically there as a part of the listed real estate residential sector, as part of the listed real estate there, the residential sector was between 10 and 15%. So it naturally should follow here. I'm not sure how many years we are behind. Over and above that, we've got a board that's got fantastic experience in terms of residential property, and we've come across opportunities that really fit Arrowhead's strategy of buying yield accretive or enhancing properties above our cost of funding, and also diversifying risk.
There used to be a listed residential property fund called Stanprop, and it was a poor performer. What makes you think that you're going to get this one right?
We've sort of been able to see in the affordable housing area of the market that in terms of rental growth and almost lack of supply, there's a shortage of
So you're going down down at the
We'll
at
be
the
looking
bottom
at the affordable housing market really between 500 Rand and 4,000 Rand in terms of rentals, and we believe that there's a real shortage of accommodation in that area, and that will lead to greater distribution growth and rental increases over the longer term.
There's no doubt a shortage of accommodation, but surely the admin cost of collections must be high there.
It is higher. I would say the general property manager in the residential space is 6.5% to 8% in terms of property management fees, compared to between 1.5% and 3.5% on the other side. But it's a cost that one has to factor in up front and make sure that one's buying at the correct yield after all the costs have been
Morris,
factored in.
do you like that side of this business?
I certainly like the residential side of the business. I think firstly, residential only makes up 1% of listed real estate in South Africa, and as Mark mentioned, it's more like 10 to 15% in developed markets. That said, so the only other listed property fund with any substantial residential is Octodec, and Growthpoint has a small portion in the V&A. I think there's a huge demand for residential to be let. I think also your vacancy factors in residential is very low. It's only around 1%. It's a very granular income stream. So once you get it right, then it works well. It's when you actually have to build up that income stream that sometimes takes some time. So, Arrowhead are buying a fully let property, a group of residential properties, and that has been well managed. That's in the whole cost of actually managing it, because it's very operationally intensive, is already in the cost. They would acquire that at north of a 10% yield. So we see that as yield enhancing. It's an attractive offering. It's a diversifier, and it also is a very granular, solid income stream. 400
million you spent there. Gugu and I were talking, I'm just trying to find the guy's name. Remember last week, the property guy, the rent.
He's not from Guardrisk, but he is
from
associated with Guardrisk.
Naughty. But he said, what was the percentage insurance that he wanted? Was it 10%?
10%.
Now that sounds, so he said if you want a guarantee to get your money from a property client, you've got to pay them an insurance policy of 10%. That's a lot higher than the numbers that you guys are talking.
Sorry, just explain the question to me again.
What they are marketing is that many people don't pay their rent.
Yes.
So as a consequence, if you want to guarantee that you're going to get your rent from residential, which clearly you've put 400 million into, then you've got to pay a 10% premium, insurance premium, to make sure that the money comes to you.
Okay, so I think, I've been involved in running a portfolio of 500 million in terms of affordable housing and student housing as well. And I think it operates slightly differently, definitely in the areas that we'll look to buy. I think what the general principle is that people pay 1 month's rent in advance and a deposit. So effectively for a year's rental, you're paying 2 months. And I think with low vacancy rates, as Maurice mentioned, of around 1%, that should something go bad, you replace the tenant and fill it with another spot. And that seems adequate. And if you speak to any big residential player in the country, I think they will confirm that, specifically in the affordable housing market.
So this guy's overcharging.
Well, I think definitely
what you're telling us.
I think definitely what Mark was saying is your residential property, you're putting down deposits beforehand. You do have tenants defaulting, but it's on occasion, but you've got their deposit. And there's a huge demand, so you've got a waiting list, so it's easy to fill the space afterwards. So that's, I think, the key. And that's why there's a whole business insuring the residential income, because you can make a good premium and the risk is quite low.
Where there's an opportunity, there's money to be made, Alec. But Maurice, I'd like to bring you in just with regard to the investment landscape with regard to property in South Africa. Not too long ago, we saw a Chinese property developer moving into the South African space and purchasing land from AECI. When you look at our property space, is it being picked up by foreigners?
I think there's definitely far more interest from foreigners. We've seen even in the listed space, the percentage of foreign ownership is certainly increased. That said, I think as you were discussing in your prior with Paul, was all about Yellen and where's interest rates going and how's that going to play out. And I think that's probably quite crucial in investing in South Africa when you start talking about that compared to investments elsewhere. And so we quite concerned about interest rates at the moment. And so there is, I think you have to be very selective when acquiring any kind of asset, but if you're doing it from a direct property or from a listed fund. and that's how we operate. So we're very selective in what we choose. We don't like to own all the listed property stocks. We only want to own a few of them.
You're riding a tiger, though, aren't you, with this quantitative easing? And if the tiger breaks loose, if they start tapering, a horrible word for you investment types, then things are going to change and the game's going to change.
Yeah, I think that's an important element. I think from the comments that we've seen out of the Fed recently in May and September, it was almost tapering was on, then tapering is off. Now tapering might not be on, or it's only going to happen later. It's very hard to get off QE once you're on it.
It's like a drug.
It's a drug. And it's unlikely, given the kind of growth prospects we're seeing in the US, that they're going to get off the QE train anytime soon. That said, I don't believe that SA bond yields are going to suddenly go down either. I think we might actually find the opposite happening here. So it's just because you've got money to invest doesn't mean it's going to find its home into South Africa. So I think QE might be there for a bit longer, but risk might be still off, and South Africa might not be a beneficiary.